Good morning, traders. Welcome to the #1 morning show to get you guys started pre-market prep. Let's go ahead and start diving in today's action. We'll take a look at what happened in the overnight action. Oil prices extending gains, crowded short trade out there, earnings. We'll talk a little bit about Bank of America, Goldman Sachs, earnings for the rest of the week, outlook. Very important to keep on watch. Delta buying Boeing Max planes. Ford newest pickup truck. Who wants it? The F-150 Raptor R. We'll talk a little bit about that. Shares of Google trading following the effect of a 20-for-1 split. And we'll talk a little bit about what's going on in Starbucks and what could potentially be coming in Tesla's earnings. We also got a special guest. Don't have Tim Quast as he's biking in the Swiss Alps right now, working hard, having some fun also. We'll have, though, Christian Fromhertz, founder and CEO of Tribeca Trading Group. So stay tuned. Got a great show for you guys. Hit the thumbs on up, and let's get pre-market prep started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, traders, I will let you know we're going to have a little bit of a different week, a little bit more of Dennis and Mitch rants this week because no Joel Elconin. Let's bring on Dennis Dick. How we doing, Dennis?
He takes so many vacations, this Joel Elconin guy.
He must be making some good money, right? He has to be making some good money because
I just feel like he's always on vacation. I haven't taken a vacation in like 5 years, I don't think. My vacations are only when I have internet problems. Then I get a day off. That's how it works. Wow.
We got to learn. We got to learn maybe not to sell as much, and maybe we'll learn like Joel and have some good vacations later on.
I mean, if you don't have a sell button, you're pretty happy here this morning, anyways, because the markets are ripping here once again. Talk about a 3-day or a 2-day rally here. Started to turn it around there. Obviously, just going back to Thursday afternoon, we've been basically straight up from 371 Thursday afternoon to 389 on SPY. You're talking 180 S&P points. In basically 2 trading sessions. That is a hell of a rally. Huge rally. I'm glad I bought the dip on a few stocks. I obviously wish I would have bought a few more. But, it's been this market where it seems like, you chase, you're going to get punished. But I tell you, played to chase on Friday because they're going up here again this morning. And I mean, what's the max pain trade here? Every analyst comes on CNBC, they're bearish. I was seeing tweets over the weekend talking about, money managers are the bearish they've been in decades here. So it's a sentiment has been, in the gutter here. So max pain trade is, let's squeeze them. You're bearish? Well, we're taking them higher on you here. So, and, going back to obviously the CPI data and what I was talking about, and we did sell off after it, but it just felt like, okay, it was a 9.1 and it's a horrible headline number, but we know, commodity prices have started to come in, which aren't reflected in that data yet. We know there's a lot of, other things that are starting to come in pricing. I mean, housing in Ontario, at least, has imploded in pricing. So, I mean, there is prices coming in, and that's why I get optimistic that we're at peak inflation. Does that mean we're at a market bottom? Not necessarily, but the markets are telling me too, like I've said, and I've held myself out here on ARKK, that I think the 2022 low in ARKK could be in. Bring up ARKK, Mitch. You can see a nice little tidy triple bottom here from the last 3 days. Joel would like this: 42.31, the low on Wednesday, 42.27, the low on Thursday, 42.20, the low on Friday. That's a triple bottom if I've ever seen them. Some people say there's no such thing as a triple bottom. I'll show you that one right now because it's coming up here the other way. So growth stocks haven't been performing as well as some of the value stocks the last couple of days, but they're holding up. And that's the thing, is you can keep looking at it. Oh yeah, we're going in a recession. It's all going to be ugly. But we've priced in a lot of bad news, and that's why I started adding to my stock positions ahead of this earnings season. I'm not all in. There's a lot of risk out there. I don't think it's an all-in market, but it's not an all-cash market anymore either. If you're sitting with 100% cash, you should have been putting that to work in the last couple of days on the dip, in my opinion. So here we are coming into earnings season. There's going to be lots of earnings. And I will say, let's go into earnings here too. So far, so good on the earnings, Mitch, because even the companies that reported and missed kind of have been bought. So, and the ones that are beating are just ripping and not looking back. And, we're going to get to the ones this morning, but I think we got to go to Citigroup on Friday. This was a monster move.
Before we get into the earnings today, I definitely agree that was the move. I even sent Dennis a little gif. I was like, man, on that Citi pullback towards the open, it was just like buy. And that's really what took them off. I think, right at the open, you actually got a pullback there in Citigroup, and that pull grab. Yeah, it was a very, very small one, right? And with that pullback, it just took off. It went down a little bit, just popped there to 47, pulled back here, slightly below that 47, went to 46.19, and then really just took off there. You can see here on the hourly, I'll show you guys it. And from that push, boom, went right to 50s now. What do you see on Citigroup?
Well, the trade's already been made. I mean, it's hard to make a trade on something after it moves up 12%. But we were talking about it on the pre-market show after it reported, and it was trading up 3.5%. And I'm like, you just can't fade anything on good earnings here because we're expecting bad earnings. And now we get good earnings. They're going to buy the hell out of them if they're good earnings. So, and I mean, that's what happened. And I can't remember the last time Citigroup went up 12% in one day. I mean, you're talking about a stock that went from a 52-week low to getting back basically a month and a half of losses in one day. I mean, that's a squeeze. That's, even more than a squeeze. That's just punishing anybody who's on the other side, but it's punishing the people who are in cash too. So, and then what I really like too, going back to Friday's action, just recapping before we get into Goldman Sachs, was Wells Fargo missed. And it started going higher right from the opening tick and kept moving up and obviously closed green on the day. So here's a company that actually misses earnings, closes green. That's what we talked about a week and a half ago with Micron. That's what we need to see. That's the bull case, because the earnings, there's going to be earnings warnings, but we need to see them get bought on the dips, or we need to see actual buyers say, okay, this is as bad as it gets, and I'm going to start nibbling my toes in. So I will say with this earnings season, so far, so good.
Yeah, we'll see what happens. Let's continue into the earnings today. Let's cover Bank of America and Goldman Sachs. First one we'll get into Bank of America. Let's take a look here. Bank of America is coming in here with a miss. EPS at 73 cents, missing the 78-cent estimate. And sales were at 22.7 billion, missing the 22.78 billion estimate. Coming down a little bit, looks like it's trying to find some support. We'll see what happens here. I'd be paying attention towards these high closes over here around the 31.85s. You've already cut below that. Now you've held that now. I'm going to continue to watch if we could hold that towards the bell.
And again, you have disappointing earnings season here, but now you have traders who are scared. There's so much money that is just sitting on the sidelines. And I mean, I've never seen, you go on CNBC, another analyst is bearish, another analyst is bearish. It's like Wacky World. You never see this. Bearish analysts are always bullish. They're downgrading stocks, and, and I think they're all it's dumb money again. And they're all late to the party here, and they're going to be chasing here again, because I think the pain trade is higher. Just going, to a tweet I saw on the weekend, JC Peretz, who's awesome, retweeted this. It was from, I'm going to butcher the name, Gunjan Banerjee, said, and I don't know how true this is, but it says equity futures positioning for asset managers and leveraged funds is now the most short on record. I guess that was coming from Deutsche Bank. A Deutsche Bank asset allocation it was coming from. And that's crazy. So you're telling me asset managers on the most short on record. That's telling me this pain trade might actually be higher. I mean, you could feel the turn. I mean, we talk about on this show is I make money on my turns. I don't make money. There's trend following. I do that when it's working, but I'm also, because I'm right in there, you can kind of feel the turn. And I felt the turn a week ago. I was a few days early, but you could kind of feel it before CPI. And then we got hit on CPI, and it was just another, and that was just a buying opportunity is what that ended up being. So I think we could have 4,000 on the radar. Again, though, We just rallied 5% in 2 days. So I think I need a pullback here before I redeploy more capital. I was buying stocks on Thursday. I told you the stocks that I bought. I bought some Square. I bought some more AMD. I bought some more Micron. I bought IWM. I bought TD Bank, some Canadian. I wanted to buy a bank. I did buy some stuff. That was like Wednesday and Thursday. And they're working here, obviously the last couple of days. So I think I need another pullback before I really go all in. And those were long-term investing, bringing that cash portion, which I was sitting at a week and a half ago at 42% down to 31%. That's a pretty big move. Am I going to bring it lower? I think I will on pullbacks here. But again, I'm never one that goes all in. You never see me on my invest portfolio 100% in because I want some dry powder. And there is still a lot of bad things that are going to happen. You're going to see some earnings warnings. You're going to see, some responses. You're going to see some more upstarts. Upstarts still a disaster, not really bouncing much. Obviously gap down on the report. So you're going to still see some bad stuff. So not just rah, rah, bull, let's go. But I think the time to be bearish, full on rah, rah bears, making money on the short side is behind us. And it's more, it's going to be some chop, but I do think we turned, at least in the short term, we've turned.
This is something definitely is going to be questioned about, and all different types of media and a lot of investors are going to be making that call today. I think I'm still a little bit on the sidelines. Biggest thing for me is I want to see some data actually point that inflation's peaking, and I think that at this point you have your option to make. Do you want to get ahead of the market? And the market's at least showing a decent rally, that's for sure. The question will be when we get up to certain resistance, what will happen then and how far up we can go. I think another thing that continued to watch is, of course, the earnings later in the week. If we could continue getting, like Dennis says, rallies off of bad reports, that's going to be definitely something to watch and could signal that, yes, people are late on the ball and the bottom is in. But I think, at least in my case, I'm going to be just waiting until I can actually kind of react in an investment outlook. But in the trading outlook, I completely understand why you're trying to ride the momentum right now. And
I
see
think
that
from an
momentum
investing
ride.
standpoint, if you're 100% cash, though, I think it's in the
100%, yes. 100%, yeah. I wouldn't agree with being 100% cash. Probably never, really. I mean,
no, never. I never do that.
100% cash is a little bit different.
But even like over cash, like I think almost like a
quality
market neutral stance at a certain point in time. Like, okay, I've got some cash, but I've got some equities working here for me. I mean, if you've been 100% cash all the way down, congratulations, you're killing it. I mean, the first pullback, I'd be deploying capital, but it's hard to say. Nobody has a crystal ball. Nobody knows what's going to happen here. We know there's a lot of bad news to come, so the news flow is going to be negative. But as long as they respond okay to that bad news, that's what you need to see. So let's jump in, though. We have good news here this morning, too. Go to Goldman Sachs.
We'll be watching really this green area here. This is a weekly outlook on that. And that's the green area right there, financials. Let's dive a little bit deeper in there. Let's get into Goldman Sachs, right? And so what did they do? So good report coming out of here. It kind of went up, kind of went down. It was a little bit bouncy here in the pre-market, but holding the gains now up there towards 304.99. Goldman Sachs EPS coming in here at $7.73, beating the $7.25 estimate. Sales were at $11.86 billion, beating the $10.96 billion estimate. Goldman Sachs does it again in a volatile environment.
They just do it. They continue to always beat earnings. Morgan Stanley, obviously, we heard from last week. They've turned around after making a new low, then moving higher here. And now, I think Morgan reported last week. I'm losing my mind here, Mitch. Morgan reported, right?
Yes,
yeah.
Correct.
And then Goldman, obviously, reports beats. They just seem to always beat. Stock is basically as cheap as it's been in a long, long time. If you look on any valuation metrics here, I'd be a buyer of pullbacks on Goldman. Like, I don't want to chase, though, and I want to keep stressing that point, because if we turn around and sell out today, everybody's going to say, Dennis was bullish, and now, we went down. He's wrong again. I'm trying to say that overall, I've turned bullish. I turned bullish, a week ago. I was a little bit early, maybe even a week and a half ago, definitely a little bit early, but leaning more bullish. But I'm buying pullbacks here as opposed to just selling every rip. It's like, 2022 has been sell the rip, make money, forget about it. I've turned, more to buy the dip as opposed to just, jump and sell the rip. And we're always buying dips and selling rips. You're always trading in and out and out and out. but leaning
Exactly.
more as my entry positions. It's more exiting when I'm selling the rip and I'm talking from the trading perspective here. So, and obviously, I'm thinking, tech. I'm, seeing, how many of these stocks are down 40, 50% from the highs. I just think we've got an opportunity here. I think there's an opportunity on dips. And this is not a dip. It wasn't a dip Friday. It was a dip on Wednesday and a dip on Thursday. Dip will happen again. Don't kid yourself. We're not just going to march out of here and we're going all-time highs. I don't think that's happening. I think there's too much bad news to come. Fed's still going to raise rates. To your point, Mitch, maybe we should talk Fed speak a little bit here. But, I mean, we do have a 9.1 CPI number. There's no doubt they're going 75, and you think they might go a full point.
Yeah, that's the real concern here is what happens in the Fed, right? And the recession concerns of the Fed just being more aggressive as they see inflation not topping and a strong unemployment out there. You can tell that, I mean, the jobs market looks really strong. So what's to hold them back from going to 100 basis points is the only concern I think I have, because I think even a 75 basis point hike rate is the market. I feel like it's going to react positively on that. So we'll see what happens. I think the worries are definitely starting to slowly ease. And so I can agree with that at least out there, you're seeing a little bit of that inflation peak talk, but there's still no data behind it, right? And
Yes.
the Fed like to wait for data. And so in my eyes, that's the only thing. It's speculation that inflation has topped, but still nothing that is 100% certain. And that's the only concern that I have that could point us to the downside. But I do agree that you have that.
There's a lot of concerns. I know you said, but there's a lot of concerns that could still bring us to the downside. And it's been 12 minutes of bullish talk here, Mitch, but it's not just the only concern. There's all kinds of concerns here. I mean, from a recession standpoint to, like obviously demand destruction that we've talked about, to price employing. There's lots of fun things to worry about if you really want to worry. So we don't have the one thing I'm just saying is a lot of those things could potentially be priced in. And I agree, we could go 100. They might go a full point. Canada just went a full point. So it can happen. Doesn't make a difference. I mean, Kramer's been, saying, oh yeah, let's go a full point and get this over with. It's just stupid. I mean, it's not just over with. We go 2 full points. It's not just over. It doesn't just end.
Unfortunately,
inflation just doesn't disappear because we go a full point. It doesn't just end. So I don't even know what that conversation that he's been talking about for a month is. I mean, it doesn't just end. I mean, they're doing it in the right way. This thing just takes time. You could go up 5 points overnight. I mean, there's still people got to max out the credit card debt. They still have to do it. There's a path to destroying demand. It doesn't just get destroyed because interest rates go up in one day or interest rates go higher in 2 months. There's a path to demand destruction, and they're trying to destroy it. Don't kid yourself. The Fed needed to destroy demand to get inflation in check, and then they will try to bring the rates back down and get demand back. That's the goal. It's going to be hard to do, and the hardest one's going to be labor. So it's not just going to be like all of a sudden we're back at 2%. That's not happening. We just need to see improvement, and as a trader, we just need to see improvement. But remember, if you're sitting in cash, stocks are inflationary as well, commodity stocks especially. Maybe everybody wants to talk oil. Oil has pulled back. I won't argue with you if you're making positions and taking positions in oil stocks at this point in time. I'm not doing it as much, but part of me wants to buy Oxy. Part of me sees Warren Buffett buying it every single day and thinking, I think he could still take it out. Kramer said it the other day too. He thought that maybe the whole company could get taken out. I think it's possible. I don't know if it's probable, but he's got like 18% of the company here now. He could just go bid at $85 and take the whole thing out, or he could just keep doing what he's doing and just keep pecking away at it, which is working for him as well. I mean, Oxy's pulled off the highs. So if I was buying an oil stock, Oxy would be on my list. I think Chevron CVX would be on my list. 180 to 137 is a big pullback. But again, these trends are broken and they're crowded trades. So just because they come down and obviously you think the oil's going to go right back up, that could be the case. But the oil trade is very crowded long. I don't like going into crowded trades that are long, which is probably why I still stay away.
Yeah, something to keep on watch is how the dollar reacts, right? If we get a weaker dollar, will that kind of help oil prices rise? Today, you're seeing a weaker dollar, oil prices rising on that. It's something to keep watch. Do we get another rally in these oil names, or does it just continue its slow leak down and we get some price stability? Is something to keep watch. we'll see what happens there. Let's go to earnings for the rest of the week. Something to talk about, definitely something to keep on watch. I think it's going to determine a lot of how we get kind of movement to happen here. Let's take a look at the calendar here. What else is going to be on? Of course, today after the bell, you got IBM. You guys can keep on watch. Then tomorrow, Johnson & Johnson, Lockheed Martin, Halliburton, a lot going on. And then Tuesday after the close, you got Netflix, JP Hunt, Interactive Brokers.
Look at the names.
So much that's going to be going on
in
just the next 2 days, right? So what stands out to you here, Dennis?
Leave that up for a minute. Let's just jump into, obviously, IBM is here tonight. IBM is, IBM. I mean, everybody looks at it and they think it's a turnaround story, and maybe it is to a certain extent, but I've tried to play the turnaround story in IBM before, and it hasn't worked out well. So I'm just going to stay away from IBM and let other traders handle that one. I'm long Netflix, or my wife is actually in her registered account, a long-term account. Great day for Netflix on Friday. I think it was trading up 7 or 8%. I didn't look at the final tally on Netflix, but significant rally here. I think let's go into I don't care about the IBM chart. Let's go into the Netflix and we'll just
I got you right now.
Obviously the expectations are in the gutter here. The question is, how bad is it going to be? Is it going to be one of those that gaps down a bad report and gets bought? Is it going to be one of those that, hey, the expectations were in the gutter, but it wasn't that bad? I'm hoping it's in the latter camp. I thought about adding more to it into the report, but now that it just rallied 8-9% ahead of it, I'm probably not going to do that. So, and then you get Tesla on Wednesday, Snapchat on Thursday. I'm just looking at the list there too. There's so many companies that are reporting here that are obviously market moving and impactful. And then next week you get into all the guns, the mega caps. So it's going to be interesting here. What are your thoughts here, Mitch? Like jump into a couple of these. Like what stocks are you looking at for earnings this week?
Let's do it. So first one's first on my radar is that Netflix. I think it's an important one to watch. Big thing is expected to lose subscribers again. If for any reason you see an added subscriber, I think this goes up like a rocket, right? And so if they're expected to continue losing subscribers and they could flip around, somehow get into the positive, I think that could be the story that brings it back up towards, let's say, 250s into that gap zone above. If for any reason you still see concerns there and it's massive loss of subscribers showing more consumer demand destruction, even in streaming, that could be the downside that continue us down through those lows. And then next thing you know, you can see Netflix possibly at that 150 area. It's going to be something that I'd watch. Maybe it does a run into earnings because maybe some people just try to have it getting up there towards the 200 level first. So it's something that I would watch earlier in the week, maybe for a quick trade, but I'm going to definitely wait for the earnings to come in on Tuesday. Then
remember, Netflix is going to move other mega caps too. I talk about relationships all the time, and this is what I'll be looking at is this is the first, and it's not, but it's part of FANG. You think about it's all it, and obviously maybe it shouldn't be anymore, but I mean it's a big tech stock that everybody's going to look to, and it's really the first big tech stock that we're getting. I mean, Tesla's going to be more of a market mover on Wednesday for the overall markets. I'm really worried about demand destruction at Tesla. I'm really worried that, obviously the orders, there's all that there, but I just think going forward, I'm worried about the outlook to a certain extent because I don't think people are buying cars and I don't think they're buying EVs. So I've been worried about that for a long time. That's why I sold my Ford, obviously sold most of my General Motors position. So I'm worried about that one. That's coming up Wednesday night. But you look in here and you think, some of these companies are obviously going to, miss your earnings, but there's going to be some beats in here too. Going to be about the response to those earnings. I'm going to keep saying the same thing because that is what is working, is analyzing, not so much the earnings were bad, but what was the response to the bad earnings? Micron, Wells Fargo, disappointing numbers, lowered guidance, or at least Micron lowered guidance, and they bought the stock on it. So that's the good news. Bad news is we're still in downtrends. The bad news is overall there's lots of things to worry about, and maybe this is just a bear market rally. It very well might be. It could be a bull trap. A lot of them have been in the past, so it's hard to go all in, but it feels a bit different this time.
Something to keep on watch is Tesla, and do they announce kind of a depreciation charge of their Bitcoin? They have a value of 43,200 Bitcoin that are on the balance sheet. They have already lost about $460 million on this. The question is, does it show up
Tesla with
on the
Bitcoin?
second quarter results?
No,
Yes.
Tesla with Bitcoin's meaningless.
Well,
Absolutely meaningless. It's not even a drop in the bucket. It's just a sideshow. So
Okay.
I would say that's absolutely meaningless. So I wouldn't worry about anything with Bitcoin. With Tesla, it's not a Bitcoin stock. It's an EV company, and it's obviously on Elon Musk. The Twitter news is more important to Tesla than anything. But you did mention Bitcoin. We should talk Bitcoin. Bitcoin is a
Bitcoin
risk
itself.
asset. Bitcoin is a BITO. You can bring up whatever you want to bring up, or you can bring up Bitcoin itself. I usually watch BITO, which is a good way just to track what's happening with Bitcoin as well. It's a risk asset, and there is the positive correlation with the Nasdaq is just there. I mean, if you're not seeing it, it's there. We did put a nice little tidy little double bottom in a Bitcoin. If I'm bullish stocks, you're going to be bullish Bitcoin in the short term. I don't want to have. I have a little bit in the long-term portfolio. It's not like I'm going all in on Bitcoin here, but I said it last week. I wouldn't want to be short Bitcoin at this point in time. And I went down a couple days after that, but then put in a double bottom. So, I mean, you're right there. The 19,000 level is huge on Bitcoin. You're seeing it rip higher here this morning. What are we, 22,000 on Bitcoin right now? Money Mitch?
Yeah, Bitcoin's right now at 21. It's up about 5% on the day.
Yeah, almost 22,000 here.
Yeah,
So
almost 22.
I don't, I'd be scared if I was short it right now. So I'm not a big crypto fan, but I can see the bull case here to a certain extent. We've come down significantly. Stocks are starting. It looks like risk on trade is back on, and Bitcoin is a risk on asset. It's moving around with the Nasdaq. JC Peretz has showed that correlation in the past. We've talked about it. Maybe it wasn't correlated for the first 9 or 10 years of Bitcoin, but since the masses are in, it is now a risk asset and it moves along with the Nasdaq. So if Nasdaq's rallying, usually you see Bitcoin rallying as well. Positive relationship there, positive correlation.
And lastly, just to wrap up those earnings later in the week, we didn't talk on Thursday and Friday, but Thursday you'll get American Airlines. Definitely that will be on Watts. Snapchat also on Thursday, and that's after the bell for Snapchat. And then Friday you'll get Twitter and Verizon. So we'll see what happens with Twitter and Verizon. American Airlines will definitely be on watch, but Wednesday after the bell, United Airlines will have reported, and that will be interesting also. Let's go into the Delta news today. I want to touch that before we get into our interview that's going to be coming up with Christian Fromhertz, founder and CEO of Tribeca Trading Group. Did mention earlier in the show, if you didn't catch it, Tim Quast is in the Swiss Alps biking, so he will not be with us.
Everybody's got a
today.
better life than me and you, man.
Right?
We sit here, we're stuck, we love doing this show, but I mean, we don't go places. We don't go to the Swiss Alps. We don't go to northern Michigan. We don't get to do any of this stuff. We just get to work, me and you.
The only mountains we see, Dennis, are stock charts.
Yeah, well, that's it. And we climb up the Swiss Alps stock chart, and we climb down the Swiss Alps. And sometimes on the wrong side of them too. Yeah. Sometimes it's an avalanche on top of me, believe me.
That's just how it goes. Let's get into this Delta news here. They're actually buying MAX planes. So let's talk a little bit about that. Let me pull up the chart here. EAL here. There you go. Put it on up. Does Delta buying Boeing MAX planes? The deal is for 100 737 MAX 10 plane with options for 30 more. Deliveries would be stated to begin in 2025. This is Delta's first order in more than a decade. One thing, though, to keep in mind is the MAX 10 model is the largest of the narrow-body MAX family and does not yet have government approval. So it could fight there. We don't know. Boeing hopes to win approval by the end of the year. So this order could turn around. I just wanted that's kind of stated there.
Oh, I mean, what's interesting is that, we've come into this market where everything is just moving together here now. A stock is a stock, a commodity. I mean, how many days, do you see oil up and airlines up? And I mean, we've seen this the last few, the last couple of weeks where oil's going down, airlines going down, everything's going down together. I mean, here's a day you come in, oil's ripping higher, like that's not good for airlines, but airlines are ripping higher too because it's risk on market right now. So that correlation will break down eventually, and airlines will move opposite to oil prices, which they should. But right now, a stock is a stock is a stock. and it's buy all stocks or sell all stocks, everything kind of moving together to a certain extent. And airlines are trading up here this morning on oil trading up, and airlines is trading up because it was a risk on day. We are leaking a little bit here in the S&P futures. People are asking, why are we leaking? Well, we've run a long way, so there's going to be some profit taking in here too. When we started talking on the show, we talked about being Thursday morning at 371 on SPY, Friday night at 385, and coming Monday morning at 387. That's a tight 160 S&P point handle on CPI data that everybody thought was bad. So, I mean, nothing's going to go straight up. We're not going straight to 4,000. It's not that smooth. Do I think we could get to 4,000? I do, but you got some pesky highs to contend with at 393 on SPY, 390 on SPY. We get up there. We were 388.5, 389 this morning. So you're running into that first part of resistance there. Nothing is that smooth, but we're leaking a little bit here.
The dogs are barking. The dogs are barking. And I also saw another dog bark in the headlines, which was Ford. I'm going to call it a dog because it's been a dog lately. Let's get into the Ford's newest pickup. Their F-150 Raptor R, making the stock move up a little bit today. You guys can see it up there towards 1205. Showed some bottoming on this chart down there towards, let's say, the 1121s. You can maybe pull it down towards 11. Their newest pickup, the F-150 Raptor R, which I haven't driven the Raptor R, but I've driven a Raptor. It's now has a supercharged 5.2 V8 engine that produces 700 horsepower and 640 foot-pounds of torque, baby.
Holy.
Look at that. Look at that. Oh, that Ford, baby. Represent.
It's a nice looking car.
Have you ever driven one of those, Dennis? The Raptors?
No, but it's a nice looking car. So I'll tell you that. I'm not in the market to buy any new cars though, because I just can't stand what the prices of cars are. So you know what I think of cars overall here right now. With that being said, obviously Ford stock has been punished. It's moving with the other stocks. So I'll just limit my comments there. And I do have a small trading position, the overnight trading position, so I'm going to limit my comments on Ford. But let's jump into the next stock.
All right, let's go ahead. We'll keep going here. It's about to be 8:35. Let's take a quick look at Google and after their 20-for-1 split. And so let's take a look there.
Looks weird. It looks really weird. It looks like I'm down a lot of money.
It looks like you're down.
I'm like, oh, what happened to Google here over
I'm going to zoom in because if not, I'm going to get crazy with a chart like that. So it looks like we've been leaking a little bit here, right, since 8 a.m. We were at the 114.50 area. The split adjusted price, I believe, is closer towards 113. Let me just check here. I just need to get here. What's the open there? 113.76. That's what I have right now. So just continue to watch here right at the open. We'll see if we kind of leak off of this or do we get a boost.
We did not really rally into the split.
Exactly. That's what I was going to know.
But it didn't really rally. It was not rallying into the split. So, maybe this is going to go off the grid and rally after the split. I don't know. Typically, they are weak post-split. So we'll see what happens. It hasn't been playing by the book at all here, though. I mean, stocks are just moving all together, too. So it's hard when everything's just moving together like that. Google or the Googles, pick your poison here. The new price, 111 or 113, just looks weird if you're looking at GOOG. You're in a channel. I mean, major resistance up at 120. Major support is down here in that 104, 105 area, and kind of stuck in the middle. So I don't think there's much of a trade here.
All right, something to keep on watch. And also, GME is going to be doing their split. I'm pretty sure today's the day that.
GameStop splitting right away here too.
Yeah, GameStop. And so keep this one on your radar today.
The most unneeded split.
Yeah, but this one actually ran into the kind of the split date. So it was announced there, and people were thinking this was going to actually drop it, but it actually has been pushing up here. It's up there towards the 144s. And it's been holding AMC well also. I would say that too. I mean, look how that's been running with it. So who knows? Will a GameStop run today? I'm not sure, but it's something that will be on my radar, definitely with mentions of the split, and it's been holding well. All right, let's get out of some stocks. Let's go towards my man, Christian Fromhertz, founder and CEO from Tribeca Trading Group, helping us in covering there for Tim Quast. Welcome, Christian.
Hey, guys. Good morning.
Good morning. Happy to have you back on here. Excited to get into it. I thought, you know what, we couldn't have Tim, but none other better than going to Christian. So, what do you see out there right now? What is on your radar this week? And then I'll let Dennis, of
I
course,
don't think,
kick in
Christian,
some
you don't take
questions.
very many holidays either, do you? You're
I
always
don't.
down here.
I'm not in. Unfortunately, I'm not in the where it's Swiss Alps. Is that where?
Yeah, the Swiss Alps.
There's some people that live really good lives here, Christian. I know you
Listen,
go for the odd nice dinner. I see that.
I
But
do the tour to New York City. I've got the bike in the back, so
Yeah,
but
my
I
man
just
doesn't even use a car. He says, you know what, taking the bike route. I get a little exercise to work.
it
Love it.
helps. It does help. The exercise definitely helps. Kind of clear your mind a little bit. But yeah. By the way, happy Fed speaker quiet period. No Fed speakers for the next 2 weeks.
Oh
there you
man,
go.
it
That's good
seems
news.
seems like they got their quotes in right before this, but
Oh, they always do. They always. It's like they're jumping over one another to get their views in and before. But yeah, so it is. We are officially in Fed speaker quiet period. So next the meeting is 7:27. So asking. So I think it kind of we had a big week of economics last week. We still have a couple data points out this week. We got some housing data out this week, but that gets a lot quieter along with the Fed, not having that distraction of going on. So it's really going to turn to what you guys were talking about this morning with earnings, and we'll have a very interesting week of earnings. I know you guys have already covered the banks, but I think it's going to be kind of more of that. We're going to see some things where the expectations are so low, which I think is what happened to the banks. Is that who really wanted to go long these banks going into earnings?
Yeah.
And the charts didn't look good. They looked very bad. People were worried about what they're going to say about the economy. And, you kind of have a bounce in most of them just because I think of the expectations.
I mean, Christian, that's such a big thing, as expectations going into these. And, that's what I was wondering too. I'm scared of this earnings season from just the numbers perspective, because I think there's going to be some misses. I think there's going to be some guide downs. But I mean, you get Wells Fargo, which had a miss, and they bought it. I'm like, that's good news. You start seeing those, positive response to disappointing earnings. That's what we need to see to get through this earnings season, because I don't think it's going to be that great. How are you approaching this earnings season? What's your overall thoughts?
A little bit of watching, like I didn't play and I just don't play the banks for earnings because normally they don't move that much. But I'll be taking a couple shots on I think a few names that look like they're just the expectations are really low. I wanted to talk a little bit, and again, like also just doing a little bit of watching, just paying attention to if the bad news is priced in. I think it's a very bullish sign. And I think you were basically just saying it, where if there is bad news and the stock actually goes up, it tells you that a lot of information is already baked into the stock price. So I think that will be interesting tomorrow is definitely going to be Netflix. I have a question for you. I have a little bit of trivia for you guys because Joel's not here. I
We
think
like
Joel,
trivia. Sometimes.
Yeah, Joel usually does the trivia, right? What do you think? Without cheating and looking, what do you think the PE is on Netflix?
I think it's like 16 or 17 only.
is it? Well, it did get put into the value, so I would say also I'm gonna go out and say 20.
Yeah, I mean, you guys are right. I can't believe Dennis got it. It's about a 17, I think it is.
Look at that guy. He's probably been
This
watching
guy
it.
long it.
There it is. There's the
long
truth.
it. But well, actually, it's my wife that's long it in her
It's the
registered
wife.
account.
It's
I'm
the
actually
wife.
not. I stick the bad stocks in her account. But as a family, we're long it.
Gotcha.
What are your thoughts? I mean, we go from a PE like 60 or 70 on this thing. It's like a 17. It's a market multiple now. It's unbelievable that it's come back that far. But I mean, what's that telling you? I mean, what does that tell you when they've brought this down? Is that maybe that E isn't going to be, maybe that E could even go down. It's kind of scary that, the P's drop that low to me.
Yeah, I think at this point, if they say anything positive on the earnings call,
anything.
The stock's going to move up. But the question is, can they do that? Because they are notoriously just a bad name on earnings. I think the last 10 quarters, they've gone up twice in the last 10 quarters. Actually. So I don't like that, that earnings history. But that said, I think if they say anything positive, it's got a chance. So I might take a small shot on a long, something like a call spread where I'm defining my risk.
Yeah.
But other than that, it's more or less just kind of going to be watching and paying attention to that. But I think also, you guys mentioned the positioning, right, in S&P futures and so forth, right? I mean, I think we've got a pretty interesting dynamic right now. We've got really low positioning, we've got really low market sentiment, but you don't really have any fear, right? The equity put call ratio has been kind of, not indicating any type of major extremes. You also have the VIX, which is all the way down. It's right around 25 this morning too. So it's just a very interesting combination of just the low positioning. Uh, Overall, at this point, there's already been so much unwinding of stock that I think a lot of bad news is priced in at this point.
Okay, perfect. So what are some areas that you are going to be looking to see bounce back happen first?
Well, I mean, I actually like the chart of Apple, believe it or not. For the mega caps. I think, well, Apple's not going to report for a couple weeks, but it did get over the 50-day moving average, and I think that's out of the FANG stocks. You could correct me if I'm wrong, but I think that's the only one that has gotten back over its 50-day moving average. So, it's not a real expensive chart. It still has work to do. But I think if one wants to kind of rally into its earnings, this is a good candidate, and it's showing relative strength within the group. So that's one that I'm watching. And I pay attention to a lot to. Speaking of relative strength, to other areas, and I love what's going on right now in biotech. I think a lot of people have noticed it at this point. But it's not just biotech, but UNH had great earnings too. I mean, they crushed their earnings on Friday. So I'm looking for that group to continue. It's not just the UNH, but it's Centene, CNC. Cigna looks really great on the charts too. So I think that there's some places where you can be a little bit diverse, like even within the sector of healthcare, right? You could take a little bit of a shot at like a halo, which to me looks really good. That's a name that I'm long. I'm also long Vertex, VRTX. I've also got a little bit of the medical devices space, the LNTH. So the issue with this group is it's a little bit, they're a little bit tricky because some of these smaller cap biotechs, which is great that they're showing the strength, but they could have some type of bad news on a study and so forth that could bring the stock down, and you've got a little bit more risk in that sense. So you got to, I think that you really have to watch your position size with some of these things, but it kind of can be a little bit balanced by taking along in a UNH and or a Cygnus, a CNC, to kind of balance out the risk a little bit.
How do you feel about bounce in oil names? We've been seeing a little bit of a weaker dollar today, but what do you think here, Christian? Is the trade opportunity pretty much done here and you expect some chop, or do you think we could get a trend back?
Yeah, that's a great question. I've been paying attention to this group, and I've been looking at some of the coal names too.
Mm-hmm.
AMR is one name that I'm looking at in the space because I don't have any I've kind of removed all my exposure a while ago in energy, but I wouldn't mind having like one name within the group. But it's funny because sometimes you look and and you kind of force yourself into the trade. So I've just been waiting for them to show a little bit more strength. Um, Another one that's been showing really good strength, and again, I wouldn't want to buy it here, but ARLP, that's another coal name that's been holding up very well. So there is some strength within the group, but I'm not forcing anything yet. I'm also, I know everybody's been watching the Oxy because Buffett keeps buying,
Yeah.
Mm-hmm.
which is interesting. But even like a Chevron or Exxon, I'm kind of looking for them to turn because I kind of want something where I can kind of get in, and it doesn't have to be like a real fast swing trade. It could be just something, hey, I want a position in, provided that these things kind of hang above stay above their, the 200-day moving average. Like for instance, Chevron is kind of right there. So, that would be a name that I would want to get in versus a stop, something very, keep it simple, use a stop of like the 200-day moving average. So I do think that they're interesting. I'm continuing to monitor, but I don't have any exposure yet.
Excellent. All right. So later in the week, we'll be getting names like Netflix to be reporting. How do you feel about Netflix going into report?
So the Netflix we just talked about, but
Let's go to maybe the airlines. What about the airlines?
Mitch was sleeping here. We're waking Mitch up.
I'm
I think we just
multiple
went
doing
fully into
multiple
Netflix,
things.
but we can rewind the clock if you want.
We can do the airlines. We can do
It's
American
an important
Airlines.
report. Maybe you should cover it twice. I don't know.
Hey, he gets a mulligan. It's Monday.
Oh
morning.
yeah, he's good. Mitch has been doing a great job here.
Yeah.
Great job.
I'm a man of 3 different arms and 3 different heads, but maybe one of the heads have missed that one.
So so besides the airlines, I think it's kind of interesting with Boeing. Has Boeing bottomed at this point? That's one I'm kind of looking at, and also some of the one of the ways that I'm looking at this market right now. It depends on the name, but something like Boeing, I might just be looking for a trade, not necessarily like and a shorter term type trade, but just thinking there's some good news about deliveries this morning. It got over last week's highs. I don't see any like immediate resistance right in front of it. So, something like this might be able to run a little bit. It's certainly also, and I don't like to buy stocks just because they've gone down or or they're cheap, but maybe this could be something that kind of gets going a little bit more, I'm sorry for the pun, but has a little bit more runway to it. Cause I just don't
like that pun.
Yeah, I just don't see anything in front of it. So it's nice to see some of these stocks, and again, going back to your original question of what am I looking for at this point, just stocks that have spent some time, that have been kind of carving out a low and a little bit of a base. Like Boeing's not a great example of putting in a base, but it's not a perfect pattern, but it has kind of felt like it's spent some time hovering around the lows and is starting to kind of work its way up. So I think it might be good for another 5 to 10 points at this point.
I mean, you look at the airlines here too. I'm trying to be bullish a lot of stocks. I just don't know if I want to be in airlines here though, because they're still getting squeezed on all sides here, Christian. I mean, obviously
they're
higher
too difficult.
Oil prices. Yeah,
Dennis, one of the airline stocks ever been easy to trade?
They're never, not on the long side. Not on the long side. So always seems like value traps there. You look at them and you think, oh yeah, they're turning around. Delta's throwing out good earnings. Yeah, but we got a lot of bad news here still. With oil prices, there is some demand destruction happening. Don't kid yourself here. And labor shortages, labor costs. I mean, there's just so many things. And the cruise lines for the same reasons. There's easier sectors to be long.
I like easier trades.
Yeah, that's what it is. And people, and you know what? This is just a good conversation in itself. The natural human tendency is, I want to buy that stock that's down 20% because it's going to come back right away. I mean, people naturally want to put themselves, it's human tendency to actually put yourself in the worst trades. And I mean, sometimes, it's like, the strong, we were always in the environment, momentum, the strong get stronger and the weak get weaker. So, but that's where we're at. It's tough. My kids, my wife isn't here, and I got both kids. And one's breaking into the office right now, so I'm somewhat distracted, losing my train of thought. But I mean, this is just the way the airlines have been. They've been tough trades for a long time, and the cruise lines for the same reason. I think I just stay away from there.
All right. Now, one question I did have, and I saw you put out an interesting tweet over the weekend, was about the home builders, right?
Yep.
And ITB. Let's take a look at that situation. Of course, later today, the National Association of Home Builders Housing Market Index will be released at 10 a.m. I think some people will be watching that to see what happens. But how do you feel about this area?
Yeah, so I mean, so every once in a while, I just like to tweet things because it stirs people up a little bit.
Yeah, it's interesting.
Twitter could be such a gauge on sentiment, and as well as just the overall market. I've heard a lot about, hey, the housing sector is really going to get hit hard, and things are not going to be good. And sometimes it does make sense. Well, for me, a lot of times it makes sense to pay attention to the price action and what it's telling you rather than what the news and what the headlines are. Because I'll tell you, like, it's not so much that I want to go long the home builders. It's just funny to me that how well they've been holding up the last few weeks, and they're actually one of the few sectors that's gotten back above the 50-day moving average. So the home builders are not something that I was just kind of saying, wow, that's kind of interesting. However, there's a couple charts that I do have for you guys this morning,
Let's do
and
it. Let's go
that's
through
in
it.
the retail group.
Okay.
And some of it is housing, but even something like a Deckers looks pretty interesting. I mean,
If you could do us a favor, Christian, share your charts. We like your charts.
oh yeah,
let's do it.
All right, let me just adjust
I
here.
see what you're looking at here in Deckers. I'm going to be interested on this. I just brought this chart up. Kind of looks interesting too.
Share screen.
Hold on a second.
All right.
Yeah,
how's that? Can you see the screen?
Perfect.
We
It's
see
up
it.
there.
All right. So so what I like about this is it spent some time down here, right? So it's had a decline like most stocks, but it seems to be trying to kind of turn the corner, right? So I've got a nice level to watch, which is about $5 up, 275. And you go back to I guess it was about a month or so ago where Deckers reported earnings and they had really good earnings. So again, I like to concentrate on companies that they're weathering the storm. They've said something good on their last earnings report. And then I like to see the price action confirm it. So Deckers is one that I'm watching, 275. Also something like Williams Sonoma also is showing some strength here, even though again it's in a downtrend, right? So again, whenever something's in a downtrend, I'm looking for something more for a quick trade, not so much to kind of hold it for a longer term swing. But I think Williams Sonoma is interesting, and then there's another one too that came up, which again, like flooring. Who really would think that flooring would be bottoming? But Floor and Decor has gotten back above all the short-term moving averages. I like when things get back above the 50-day moving average, and then you could use that 50-day moving average as your stop. But I kind of like the setup here.
Yeah.
Just moving about for about $5 to $7 in a trade, which is kind of what I'm looking for out of this market right now.
You know what I love about Christian? I mean, he's such a patient trader too here. And I mean, everybody, it's coming down, and you want to be the first one. And I'm a victim of that a lot of times. I try to trade the turns and a little bit different style, but he's patient. He waits for that thing to start getting above the 50 days, waiting for that trend, that downtrend to start to get broken, and consolidation at that point in time too. Like, look at the FND. It's like consolidating right around there. So your risk is starting to get less because you got the consolidation period happening there. And then he's actually looking out for it to break out above that area there. So I love the fact that you're so patient, for your setups there. And I think that's what a lot of traders are missing, is that patience.
Thank you. Yeah, I mean, wait for them to put the bottom in. Wait for a little bit of confirmation, because again, it is about the institutions have to start to buy in. It can't just be me and you. It's got to be, it's got to be the.
We
bigger,
try.
Yeah, exactly. But it's got to be the bigger institutions to start to say, hey, I want to put some money to work. And looking for a couple things that are just some quick trades while the Fed is kind of, while we're waiting for the Fed to pivot, which, we don't know exactly when that's going to be, but we hope to get it in the second half of the year. But that'll convince, the institutions to come back in too. But, for now, it's just, I'm looking for trades point A to point B. And, and then I could kind of go back to my bread and butter once the Fed decides, whenever it's the time to kind of, stop with the 75 basis points rate hikes.
All right. Last question we have a question from the chat, and we'll wrap on up. Juego wants to know, does Christian short stocks?
I do. But at this point, I kind of did a bit more of that a couple months ago. And, over the last month, I think the risk reward is now, has shifted to the upside. I think the time to be asking if you're shorting stocks was months ago.
Yes. That's what I completely agree with. And, and that's the problem is, you get people, coming on here and they're bearish now. I was like, well, where were you a year ago? Where were you 6 months ago? Where were you 3 months ago? I mean, now you're getting bearish. Like, I mean, I don't know. I guess the 9.1 thing really brought some bears out here, but I think they're late to the party.
Yeah, and the market's always about risk reward. It's always about probabilities, and one of the questions that I like saying to people is, if you look at 1929, right? If you look at all these crashes, 1929, 1987, look at all these different bear markets, and you can throw out any bear market. But what has the market done after those bear markets? After every single bear market, what is the stock market done?
Ripped.
It's
Let's
gone
just be
higher,
honest.
so yeah, I mean, bear markets are brutal while we're going through them, and
Yep.
this is a longer one, much longer one than we've experienced in the last few years. But I'm kind of confident in the market that at some point, we're going to move higher, because that's what happens after every bear market.
Exactly. Thank you, like always, Christian Fromhertz, founder and CEO of Tribeca Trading Group. I definitely advise you guys not only to check out Tribeca Trading Group, but also just check out his Twitter. I did include it in this description below, so you guys can give him the follow. Thank you for coming on, Christian.
A pleasure, guys. Have a great day.
Thanks, Christian.
Definitely. All right, let's go ahead. Let's start. We're going to start wrapping up in a second here, but I did want to mention another news that had hit the tape. It looks like Starbucks, after Sunday's Times reporting that their coffee chain is exploring the possible sell of UK operations. It's actually up right now. We'll see how it affects it towards the open.
Major
Selling.
resistance point at 80. It's $80, and it's bumping up against that. It's got some momentum, obviously, but this is just a major resistance point. We bumped up here 3-4 times in the last couple of months. It's failed every time. Let's see. Maybe this is going to be fourth time the charm type deal, which could be the case. And it does, look like it's trying to break out here. I don't know about that headline. I haven't read it. So, but it doesn't sound like a positive headline. But regardless, it's going to move with the overall market too. The one thing about, stock selection here, when we're all moving together and, as VIX is starting to come in now, you'll start to see some separation starting to happen, where we've been like a stock is a stock is a stock. You're going to start getting back into stock selection to a certain extent. And you'll start to see as the VIX comes down that stocks, start to some go up, some go down. They don't all keep moving together. So we've been in this market environment where everything's kind of been moving together for the last month because VIX has been elevated and we've been selling off. But as correlations, as market VIX comes down, correlations start to break apart a little bit more too. So then it becomes more stock selection. But I'd just say major resistance here around 80 on Starbucks.
And we'll see what happens. Last time it was a earnings pop that brought us in this area. It was around 81.27 where we kind of rejected. You could also check around the 82.87. We'll see if we get up there in Starbucks. But of course, it's going to be a lot dependent on the overall market. We'll see if we kind of push into the resistance on the SPY. I think the first one to kind of watch is around the 391.30 level. We'll see how we get through that. Right now, we've kind of just been trading sideways, leaked a little bit, but nothing much there to keep on watch. Let's go to stocks from the chat. If you guys got a ticker you guys want to check on out, that's going to do it for our headlines. Other than that, we could kind of keep a watch on later earnings stocks. We could take a look here at.
Why don't we just do some ticker time here, Mitch?
Yeah. We're doing ticker time.
We got 2 minutes here. Throw out like 3-4 tickers here.
There you go. Someone's hitting it in here. LMT, Lockheed Martin.
Lockheed Martin, obviously war stock here. It's been coming off since the Ukraine situation. Just not talking about it. It's still happening, obviously. We just don't talk about it as much, which is sad. But I mean, and I feel so bad for all the people over there. But those stocks have come off here too. Valuation is fairly cheap on an LMT. It's a stock I've wanted in my long-term portfolio for a long time. I just don't know if it's the kind of stock that's going to outperform. It's more of a risk-averse asset, believe it or not. So, and it's kind of hanging on the lows here. So this is one I'd actually avoid from the long side.
All right, EL here, Estee Lauder. Is it going to bounce here? It has some bottoming actions around the 240. Could see it could make a move up there to 260. How do you feel about household?
Well, it's one that's been hit pretty hard here. Again, kind of in the middle of nowhere though. So I think there's easier setups. I look at, it's major support down at 230, major resistance up at 270 or 245, right in the middle of it. So I would just look at this chart and move on. You want clean setups like what Christian was showing you, little cleaner setup. You don't have to swing at every pitch. And if it's just there and it's getting chopped up and it's kind of hanging out in the middle, why swing at that pitch in the dirt?
All right, let's keep going. I do see some other names here. Moderna, this setup is looking good. At least I like the setup.
Stock
What do you think
killed
here?
it, just running, and this was like growth, and XBI. Don't kid yourself. XBI had bottomed in June. IBB bottomed in June. It's a big portion of the IBB. The health stocks bottomed a month ago, and they've been leading actually. So Moderna, which is a higher beta, has been one that's been leading too. 120 to 180, big move. With that being said, it's kind of already had its big move. So I see the double bottom you're looking at there, Mitch. So that's the good news. The last couple of days, 155.93. Wow, right to the penny, 155.93.
Yeah, I really liked it that day.
You don't very often see the $155 stocks do a double bottom right to the penny. So that's the support you're leaning on if you are going along that. But now you're 13 points away from that. So you're going to put in a 10% stop. I'm not doing that, so I would.
I like the Pfizer chart a little bit more this week, but we'll see what happens. This one did try to recover the 51s. We'll see if Moderna can hold also. Let's keep going. Let's go to a next one
more,
here.
And then I got to go.
NVIDIA. Let's do NVIDIA right quick.
It's an AMD, same thing. I'm long AMD. I bought more AMD last week in mid 70s. It's 82.69. I feel like these stocks are oversold. The AMD valuation a little bit cheaper, but NVIDIA still is relative to itself. It's cheap. It's been a long time. So I like the semis here. I'd be a buyer or pullbacks on all these stocks.
There you guys have it. We'll just start wrapping on up. Like always, thank you, Dennis, for sticking a little extra there, going through some tickers. I hope you guys have a great trading day. I'll let Dennis get on out of here. We're going to continue going right here on Benzinga. Do me the favor, guys, if you guys enjoyed us taking some extra time with Christian Fromhertz or taking some ticker time, give us a thumbs on up for enjoying the show and keeping the show 100% live for you guys and free. So hit that like. I'm going to bring you guys over to live trading up next. That's what we're going to get into. Like always, guys, smash the like button. As we keep on going into the trading action, we'll bring you guys Lord Ryan, Zunaid, and I up next. I'll see you guys on over there. Smash the like before you get on out. And we'll see what this market rally kind of holds or doesn't hold today. Like always, guys, this is for informational purposes only, not to be used as investment advice. And you guys, let's get on over to live trading. Let's start having some action. Let's make some money.